Hey, what's up, everyone? My name is Ale. Welcome back to my world of stocks and welcome back to my monthly update series where we talk about three specific topics. Number one, the current state of the stock market and how I feel about everything that's going on right now, just kind of more on like a macro level. Number two, what stocks I've been buying and selling over the past month, which was, of course, September 2020. And then number three, what stocks I'm interested in buying over this next month, which is, of course, October of 2020. And if you guys want to jump to a specific part of the video, I'll go ahead and leave timestamps for you down below on a pinned comment. All I ask in return is that you please hit the like button if you enjoy the video. It really helps the channel and it means a lot to me. But with all that said, we got a lot to cover. So let's go ahead and start with part one, and that's the current state of the stock market. And you know what? October does feel pretty appropriate here, given how scary everything is looking. Not only do we have huge civil unrest, but we also have a giant political divide during an election year. And if all of that wasn't bad enough, we still got the economy trying desperately to recover after being nuked by the global health issue. Now, that's not to say that we're not gradually improving, but the latest jobs report for the past week saw initial jobless claims climb by about 4,000, which isn't too bad. And again, the trend has been mostly going down for a while now, but the issue is that we still remain elevated at close to 4 times the level we were at prior to the pepperoni. I like to track continuing claims because it gives us a better idea of who is still unemployed and receiving insurance. And when looking at that, we are also seeing progress as we continue to add jobs to get people off of unemployment. But even at these reduced levels, we're still around double the unemployment numbers of the Great Recession. And according to a new study from Harvard, close to half of all American households are going through serious financial problems during this global health crisis. Keep in mind that many businesses are still either closed or operating at much smaller capacities, and the only reason we haven't really completely collapsed into oblivion is because we've literally spent trillions of dollars on desperate stimulus, which, speaking of, there's still negotiations going on about even more spending, possibly between $1 to $2 trillion that would include enhanced unemployment benefits as well as a new round of stimulus checks. But it continues to be a struggle between Republicans and Democrats on what they can agree on. And now with the Supreme Court vacancy causing even more divide, we just really have no idea when or if more stimulus will come. And yet the markets are still trading pretty high overall. However, we did at least see some very nice dips in September that, in my opinion, were desperately needed, as each of the three major indexes dropped by around 5 to 10% this past month. The S&P 500, for example, is down about 10% from its all-time high, although it is still positive year to date. The Dow Jones is also down about 9% from their high, leaving it also in the red year to date. But the tech-heavy Nasdaq has skyrocketed by almost 20% this year, although they've too seen a pullback, actually the largest one, as they are currently down about 11% from their peak. So it's really not too bad thanks to these recent pullbacks, and I actually do think that there are some good buying opportunities out there, which we will talk more about in just a second. But do have to be honest with you guys, I'm definitely worried about all the different kind of issues that we're dealing with right now as a country, all the civil unrest, how divided we've become as a country with our different political and social views. And not just with that, but also with our views on how to run the economy. And this is all within the context of this being an election year. So nobody can really predict the future, but it will be interesting to see how everything plays out and how the markets react to it as well. But on top of all that, you have to remember, we're still dealing with this global health issue. Who knows how effective a V-shot is once it's released? Who knows how quickly it can get life back to normal for us? And on top of that, who knows what the results will be from us spending so much money? So there's just a lot of things going on. This has obviously been a very mentally draining year, and there's still so much more to go in terms of like going towards the end of this year and heading into next year. So I'm a long-term optimist. I'm hoping for the best. I'm hoping we can come together, solve our differences, solve our issues, and move forward as a country and improve on everything that we've been doing. But if things were to go south, if things were to get worse, obviously I would expect a lot more volatility, maybe even something a lot worse than that, which would be like a bigger drop, like a correction, or maybe even a crash. And so because there's just so much risk right now in the market, I have been building up my cash portion of my portfolio a lot more. I've been doing less buying, building up more of my cash portion, just in case there is that really big drop, then I can go in and take advantage of those lower prices too. But having said that, like I said before, September did see some really nice drops and dips across a wide variety of stocks. So I did go out and I did do some buying this past month. So let's go ahead and transition now to part two, and we'll talk about which stocks I went ahead and bought this past month here in September. Now, I'm also going to combine it with part three, which is which stocks I'm looking to buy next month. And that's just because I purchased so many different stocks this past month that it kind of covers all the stocks that I'd be interested in buying next month too. So we're just going to do kind of a rapid fire of all the different stocks I purchased, and I'll give you like a couple quick thoughts on how I feel about them right now and if I'm looking to buy more heading into next month too. Just keep in mind that there are a lot of stocks because I just saw so many stocks dipping at once that I did go out and buy a variety of different stocks, but they were all small positions. So it may seem like I did a lot of buying. I actually didn't do that much buying. It was all small positions, but it was just a wide variety of different stocks. And like I said, I am also building up my cash portion of my portfolio. So I'm not buying very heavily right now, but I did go out and I did do some buying, and there are some stocks that I do like at these prices. So let's go ahead and talk about all those different things right now. Okay, now I didn't do any selling this past month, but like I said, I definitely did do some buying. So let's run through them. And first up here, I had to go ahead and pick up some more of the almighty Tesla, who happened to see a very nice dip here in September, where they are still down by almost 20% from the peak that they saw at the end of last month. And I already own a gigantic amount in my Robinhood account where I'm up by over 800%. So I decided to buy just a little bit more, but in my E-Trade account where I didn't hold any of the stock. And I bought that at kind of the low $300 range, which I feel was actually a great price since they've already climbed back up to over 400. Now, another reason why I decided to buy on that dip was because I knew that Battery Day was coming up, and I gotta say, I am very happy with everything that they announced. Not only did they talk about the different ways that they plan to improve range, which I think is a huge deal, but one of the biggest surprises was that they're even planning to launch an even more mass market type vehicle that will start at just $25,000. And I think that's going to be an absolute game changer for them in the future. I always said that they really needed to get those prices a little lower to really take over the auto market, and this will be a great step in the right direction. So overall, it's a great growth stock just on its own, and I was happy to buy more on the dip for the long term. I don't think I'll be buying more in October unless they drop back down to the low 300s again, but if they do, I'll definitely be picking up more. I think that's a very high probability. Now, Tesla is already my second largest stock, so I guess it's fitting that I decided to buy some more of my number one largest stock as well, and that is, of course, Microsoft, ticker symbol MSFT, who thankfully dipped a little bit by about 10% recently from their peak, and that was enough to convince me to buy a little bit more since they rarely ever drop. In fact, if we zoom out to the past 5 years, you'd almost need a magnifying glass just to see the most recent dip, as Microsoft has one of the smoothest looking uptrending price charts in the entire market, just because their business is so incredibly consistent. And so I went ahead and picked up some more shares at 200. I probably won't be buying more unless it dips below 200 because it's already such a gigantic position in my portfolio, but I just love the consistently dominant financial performance from them. I think they have a very bright future in cloud, AI, business, and gaming markets, just to name a few, and they even pay a small dividend that carries some nice growth behind it though, with a double-digit growth rate, a low payout ratio, and 17 years of consecutive growth. So more of like a dividend growth stock rather than a large yield, but yeah, just overall, I think it's a great foundational stock to buy on any dips. Speaking of dividends though, because the market is so sketchy this year and everything going on, I've been trying really hard to beef up my dividend portfolio so that I can collect some consistent profits even through any volatility. And so this past month, I went ahead and used the market dip to pick up some very nice ones as well. And the first one up here, I bought some more PepsiCo. Ticker symbol is PEP. And you can see there how they dipped in September, currently down about 10% from their peak. So a pretty nice double-digit dip there. So I did decide to buy some more right around 130. And as always, Pepsi is just really a dividend play for me since they still yield over 3% and I've grown it for close to 50 years in a row. So I just know that this is a dividend stock I can really count on, most likely even into retirement. And as long as it trades here or even lower, I'll probably be picking up some more throughout October just to collect that really sweet dividend. The second one I picked up here is my favorite ETF right now, and I'm trying to buy as much of this one as possible because I really like everything about it. It's called the Vanguard High Dividend Yield ETF, ticker symbol VYM, and unfortunately I wasn't able to get them at those super low levels during the crash this year, but even today they continue to have a rough year as they still trade for around 17% lower than their 52-week high. And this is a level I feel very confident buying, so I went ahead and bought some more, and I'll just be honest with you guys, I'm buying this ETF pretty aggressively right now. Hopefully it doesn't end up being a mistake for me, but if the ETF keeps trading in the $70 range or even lower, and I keep buying it this aggressively, it could actually turn into one of my largest positions in my portfolio because I just really like how diversified the ETF is, and of course their very nice dividend that is currently yielding over 3.5%. It's pretty hard to beat that in an ETF that doesn't hold any real estate investment trusts and very little exposure to risky oil and gas, with none of them even in the top 10 holdings. So throughout October, I could actually see myself buying some more of this one. Now, another dividend stock that I bought more of is, of course, AT&T, ticker symbol T, which has been a go-to stock for me at anywhere under $30. And right now it happens to be trading for as low as $27, making it one of the very few stocks in my portfolio that I'm actually down on, unless, of course, you include the dividends that I've been collecting, in which case I'm probably up quite a bit. But because of the low share price, their dividends are currently yielding a monstrous over 7%. In fact, they're actually closer to 7.5% right now, which is pretty crazy considering that they've grown that dividend every single year for the past 36 years in a row. And because of that, I did go ahead and buy some more shares right at these levels. But of course, AT&T stock itself has been struggling for years now, and most recently, it continues to struggle even this year where it's down almost 30%, in large part due to their transitioning business, moving away from cable TV and wireline in favor of video streaming and wireless, not to mention that the pepperoni lockdowns have caused major damage to their entertainment and Time Warner studio businesses, but I think over time those should recover, and in the meantime, AT&T usually generates plenty of free cash flow to sustain the dividend, as you can see on this chart here. So while I definitely do admit that there is risk of the dividend getting cut if their business doesn't start improving or if their huge debt becomes too big of a burden to handle, but at these prices I just think it's worth the risk for me, and I could see myself buying some more in October as well, although I think anyone with a weak stomach should be a lot more careful. And finally, speaking of riskier kind of high yield dividend stocks, the last one on the list is of course ABBV, ticker symbol ABBV, which is the only pharmaceutical company that I own, and they've actually been struggling the last few months, currently down about 15% from their peak. So I decided that that was a good enough price for me to pick up some more shares here at around 85 bucks a share, and at its current price it still carries a mouth-watering dividend of about 5.5%. And what I've always loved about AbbVie is the huge dividend growth. They've now grown their dividend for 46 years in a row if you include the years prior to being spun off from ABBV Laboratories. But since that year, 2013, they've now increased their dividend by almost 200%, with these last 5 years being over 20% on average. So huge growth overall there for the dividend. Now, in my opinion, the stock has been pulling back recently because they've taken on a lot of debt from purchasing Allergan, who saw their beauty sales plummet by 43% last quarter, but the acquisition was still good enough to help AbbVie boost their overall sales by an estimated 37% plus this year. And the real reason why the beauty sales from Allergan dropped so heavily was really because of the pepperoni lockdowns that made everyone unable or either too scared to go out and get non-essential beauty treatments done, like Botox, for example. But I expect that business to rebound over time once things go back to normal. And as long as they don't cut that dividend, I'll be, very happy to continue collecting it through this volatility and maybe even buy some more in October if it keeps dropping. And then besides these dividend stocks, I did also make a couple of more risky, kind of speculative plays in gaming with both Electronic Arts and Glue Mobile, both of which helped me tap into the huge gaming market that is growing by almost a double-digit rate despite already being worth over $150 billion, with Glue Mobile focusing mostly on the extremely high-growth mobile markets, while EA is more of a balanced approach across virtually all platforms including also PC and consoles. I do, however, consider both to be a little speculative at this time just because their valuations are a little high. EA with a forward P ratio of 28, while Glue is a little more reasonable at 16, but Glue barely became profitable last year, so we'll have to see how good of a job they do in sustaining it. But currently, both of these stocks also come with very nice growth, as this year is expected to see sales climb by around 16% and a whopping 30% respectively. Now, their stocks also dipped a bit recently, and that was what I felt a good opportunity to buy a very small amount. Both stocks are only less than 1% of my portfolio at the time of this recording, but EA had that little dip there this past month that you can see on this 3-year chart, and I was able to pick up a little at 125, which is a decent price because it's currently back up slightly to the 130 range. And then when looking at Glue Mobile, they've really struggled recently, dropping by over 40% from their peak a couple months ago. So I went ahead and picked up some of them too in the low $7 range. Probably won't be buying any more of Electronic Arts at this time just because I'm really not that big of a fan of their management and the way that they've handled a lot of different issues that they've had as a company. And to be completely honest with you guys, I'm actually having some regrets about even purchasing the stock in the first place. So who knows if I'll even really keep this stock long term. But Glue Mobile does look more attractive to me. So if they continue to struggle, I might be picking up more of Glue Mobile, even though I do consider them to be a little risky though, so I probably won't be buying too much if I do. Anyway, that should catch you guys up with everything that I've been doing so far and how I feel about everything here in kind of the short to medium term. I hope you guys enjoyed the video. I hope you enjoyed this update. Let me know what stocks you've been buying or selling here recently, and maybe I'll talk about them in a future video as well, and I'll try to respond to you guys' comments too. But thanks again for all the support. Thank you for watching the video. If you enjoyed it, please hit that like button, and I will catch you guys in the next one. Stay safe out there. Take care. Wishing you guys all the best with everything. I'll see you later. Bye-bye.